Hello, I'm Dylan Graham of Graham Wealth Partners, which is part of CG Wealth Management. First, welcome to another edition of Deskside with Dell. Today, I'd like to talk a bit about my outlook for 2024, which I realize is kind of late because we're in the first quarter of 2024. But in my defense, I think that it'll be a pretty mundane year for Canada, Canadian markets, and I don't think we've missed much. But let me explain. As I mentioned quite a few times before, I think there's been a bit of a sea change in interest rates over the last few years, whereas for the last 40 years, there's been a general downturn in interest rate from, I guess, the 1980s down. That's all changed the last 2 years, and we're starting to have higher interest rates, which has kind of changed the investment environment, particularly for income investors. Income investors in the past were forced into the stock market through dividend-bearing stocks in order to obtain a decent yield. That's not the case anymore. They've been able to get a decent yield with GICs and bonds, which provide decent income with a lot less risk. For the growth investors, of course, they realize that whether investors themselves want to put their money aside and basically pick up GICs and bonds, the business itself must adapt and grow. And for growth investors, there's always opportunities for companies. And they always want to be there when companies profit and grow. That's understandable. The problem for Canadian investors is we're somewhere in the middle. The TSX is dominated by dividend-bearing stocks. But stocks like the banks, utilities, insurance companies, those sorts of companies. And these are monopolies and they provide stable income, which has been very, very helpful for the Canadian market when interest rates were low, but now the interest rates are moving up. We find the Canadian market is no longer the flavor of the month. So what happens, we have a bifurcation of the market. On the one hand, we have income investor looking for income for dividends and bonds. On the other hand, the growth investor is looking for growth, primarily in the United States, because if you're looking to Canada, you're not looking for growth, you're looking for stable income. So Canadians have been left out in the cold a bit, and I think that will continue through all of 2024. Basically because I think interest rates are not going to be coming down very much. I know that in the general press, there's some speculation whether interest rates are going to be coming down or not, but I think that if they do come down, it'll be by very little because there's very little incentive for governments to risk reigniting inflation. So it might be to 2025 until we see a change in that. In the meantime, this is an outlook for 2024, and I think Canadian market will be left behind because they are the middle market between income and growth, and they'll be left out. All that being said, I hope I'm wrong, and talk to you soon.